The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 2nd, wonderful Wednesday edition of today's Trader's Edge Show. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. We'll go take a look at the circumstances of what the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock on the East Coast out here in the afternoon. You know, the most important thing for you to know is just I'm absolutely grateful for your presence here. Now, I'm here to serve you, so feel free to pick up that phone. Dial on in 877-927-6648. Internationally, 727-445-1044, because this is wonderful, wacky, and wild Wednesday. Of course, there's nothing really wild about it, with the Dow only being off 44 points. Of course, this is Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 43 points, as I said, down at 17,845. S&P's off 8 points at 2,094. NASDAQ Composite up 7 points at 5,163. Russell is off 7 points at 1197. Gold's trading down $9.90, $9.90. Silver's off 8 pennies. Silver holding its own. Light sweet crude down $1.51, trading at 40.35. Natural gas back 6 cents. High grade copper off to the upside. Leading the charge, we've got Computer Acceptance Corp. You've got Netlease, Regeneron Pharmaceuticals. They're up $16.06 for the most part. GIII Apparel. That's up $5. Netflix up $4 to the downside. Lending Tree down about $10. Zaf Gen down $9. AutoZone off $6. Pioneer Natural Resources down about $5. We've got Yellen. Yeah, we got Magellan. We got Janet Yellen. She is speaking at the Economic Club of Washington, D.C., speaking out of both sides of her mouth, I believe, so not totally giving a clue to the market as to what they're going to do, whether they're going to raise rates or not. I will tell you that this is the absolute worst time for the Fed to make that decision. Just simply my historical analysis, which I've shared with you before, but then I went ahead and I've done in-depth research, and I can tell you that this is the absolute worst time for these guys to be. They missed that window, and now is the absolute wrong time for them to be raising rates. But they're going to do whatever it is that they want because she's not listening to the show here at TFNN. But if you know her personally, just reach out to her and tell her to give me a call, and I'll show her what she is overlooking out there. In any event, right now, Dow's off 39 points. Let's get a feel for what's going on inside the markets, because we don't really need the Fed to help us understand the patterns that you and I like to trade out here. We began the week earlier in the week, Monday, taking a look at 10-minute charts for the ES Mini because it was giving us our best signals out there. We took a look at price moving higher and lower, both with less relative strength and less relative weakness out here. Yesterday, we really couldn't find anything on an intraday chart. We said, hey, guess what? We need to focus on these longer-term charts because they're starting to give us retracement / top-worthy type signals out there. And it's really one and the same when I talk about that. We're not talking about the ultimate top or something along those lines out here. So let's take a look at update ourselves as to what's going on there. Let's start off. We were looking at the NASDAQ yesterday. NASDAQ Composite. It's up 7 points right now. In fact, first let's just take a look at the cash index. Let's take a look at the NASDAQ and see what it's actually done out here. Yeah, well, here's what we know about the NASDAQ. A couple of things. We take a look at this chart. Number one, we know that we're in a rising price channel. That's the first thing. Those are the green diagonal lines going on my that are on my chart out here. We also know that the Nasdaq Composite is not too far away from being able to get all the way up to at least the bottom of its swing point high, most recent swing point high, July 20th out here. And that's priced out at 52.01. It is trading above the swing point out here from the trading day of November 3rd, which is 51.63. Well, it's 51.63.47. You're at 51.63.16, 10 cents as we speak right now. So it's tested that level, but more likely than not, what it's trying to do is get up to the 52.01 area. But that's what the cash indice says. You and I have to go and take a look. And let's go from here. Let's do this methodically. Let's take a look at the summation index and the advanced decline oscillator out here, and we can see it is still well above zero. It's reading right now 25.71. So that's not giving us any indication that the bears are out in full force. Not really. Looks like it could be a shooting star candle. Depends on how it ends today, but so what? If that price oscillator is above zero, the Nasdaq isn't going south in any kind of large way. Not yet. But however, there is some cautionary signs that are out there. Those cautionary signs, we looked at them yesterday, and that was coming from the 5-hour chart out here. And we're still there. We're still in that place. Remember, we were taking a look at the 5-hour chart. What we noticed was really two things. One, price was moving higher with less relative strength out there. Never a good sign. It has nothing to do with yelling, schmelling. It has just simply the patterns that are out here. Now, we do not have any kind of bearish reversal signal. As we took a look at yesterday, we were in that seventh wave to the upside. That's letter G that's on my screen. That could be one count that we have out here. That just continues to extend its gains or extend that count out here. This candle closes at 2 p.m. So we couldn't possibly get a confirmation of that seventh wave move until the close of the contract today. So that would be the earliest. And we'd also need some kind of bearish reversal signal. It's not there yet, but this is if you were an ice fisherman, I would tell you that right now the market is dancing on thin ice. Now that dancing on thin ice just could mean a nice little retracement because we've had a big explosive move off of the most recent swing point low. And by the way, at that swing point low out here inside the Nasdaq, you'll also see that little seventh wave move to the downside out there. So, it's something for us to be paying attention to. That's what's going on inside of the Nasdaq. If we take a look at the 5-hour chart on the S&P futures contract, we can also see that we've got some synergy out here. That synergy says that it has already, synergy from the standpoint it is up in its seventh wave, and it's actually confirmed it. It confirmed that seventh wave move off of the bottom. It did that as we came into the 9 o'clock time frame out there because we did not have a higher high. Now, we don't have price moving higher with less relative strength out here, but that's okay. You don't always get those patterns, or we don't have it, I should say, on the 300-minute chart out here. So just as the market had made this bottom back here on the trading day of November 15th, we're now find ourselves with a similar pattern. Now, the cool thing about this pattern, so that would be, so the one item on our checklist inside the NQ, we can't check it out, but inside the ES, we most certainly can. That's in place. We got a bearish reversal signal as we came into the 9 o'clock time frame. Got that nice little bear sash candle. Prices moved a little bit lower. Bear sash, bears engulfing. It's been moving a little bit lower, so we're having some follow through. Assuming that there's no big turnaround time, no big turnaround in the next 45 minutes, you'll have the cemented signal out there. Now, there's a couple things. So we've got that in place out here. What we don't have in place, though, is we don't have price. Price needs to break at least the TAS market profile low because right now it's testing the high. And that high is support. Used to be resistance. Now it's support out here, which is priced out. It's easier for me to look at this on. Let me just switch over to this chart, this 300-minute time frame. This is better for you anyways because you're going to get the daily as well as a 300-minute. But let's explode this up here. So the level that's trading into 2,092 and a quarter is potential support. If that level fails, you need to then where price ought to move back to inside the ES mini is right down around 2084. But it really needs to crack 2082, in my opinion. There's a 2082. Let me switch over back here. That would be the next element, 2082.75. So we'll call it 2082. You need to see it close below 2082. If we see that, or if you see that today, I don't know that we'll see it here, if we'll see it at all, or if we'll see it during the next 45 minutes. But if we did see that at the end of the day, and you see it close below 2082, the next level of support is 2079, and once it gets below that, then we're going to see a nice retracement. You say, where's that where would that retracement take us to out here? We would really just take a look at the different levels, right? And the levels being Fibonacci retracement areas. That would become our elevator on the way down and the first floor. See, it's got to break these levels of support. So what I'm giving you right now are these potential and very significant levels of support that price has to pull back through. If it doesn't, it's just a retracement. That's all. It's just a back and forth meshing around that's going on out there. But if it breaks below those levels that you and I just took a look at, then it says we should anticipate the price would probably pull back to about 2039. Now, you're 2094 right now, so that's about 55 points or so to the downside. At a minimum, you would expect 2064. So that's 30 points below where we're at. But we're not there. I don't, even though we've got these signals out here, we're not totally there. I don't think my opinion is it would not be worth the risk to go ahead and jump on the short side of the trade. Not just yet. If we take a look at the 5-hour chart out here for the, and when I say the short side, I'm really speaking as a trader, not an investor. Not like we're calling the top or anything like that out here. We don't have a confirmation with regard to the same patterns inside the Dow. And the Dow is an important element today. If we take a look at it, let's go back and take a look at its where it's at in its summation index inside the Dow. It's really been struggling. Yesterday's move inside the Dow was enough to get the advanced decline oscillator above zero. And right now, it's really at the zero line. Negative 0.16 on my screen, but that's just really floating around the zero line out here. So it actually, the benefit of the Dow goes to the bulls as we speak right now inside the Dow. It needs to see a whole heck of a lot more damage, and it's been the weakest one. That's why I switched over to it. And that's why I say, this is not the, if you're an intraday trader, that's a whole different ball game out here. 5-hour charts, not so much intraday. It's kind of a short-term, intermediate type style term. Could last a few days, week, something along those lines out here. But where I want to grab my information from is, I want to take a look at what the strong guy is doing. That's the NQ. We'll call it the NQ and the ES. But I also want to understand what's going on inside the weak link out here. As you and I have talked about, it's not the Russell 2000. Don't be messing with the Russell 2000. But if we take a look at the Dow, it's not really giving us anything huge to the downside. No confirmations of a short-term top. When we take a look at that 5-hour chart out here, market's really doing what it's supposed to do, which is just give you a head fake. Do a little Kobe Bryant out there. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 33, S&P's down 7. I was told in the Tigers Den I can't refer to it as a Kobe Bryant head fake. Instead, it was suggested that I call it a Dave Bing. Oh, I caught you in the den. Dave Bing, for those of you that are Piston fans and old enough to. Now, I think Dave is actually the mayor of Detroit, or was the mayor of Detroit. I'm not sure. In any event, let's take a look at. That was a bazinga. Let's take a look at what the markets are. So we got a general overview of what to be paying attention to today. Inside the Dow, inside the NQ, the ES out there. So that makes it pretty helpful. I'm going to let, since my currency pairs out here are delayed for 15 minutes, let's wait till we come back from the next break. And that way I give you, some more accurate information since Yellen has sat down. But the U.S. dollar index above 100, so we'll take a look at that, the euro, and then we'll take a look at gold and silver and some of the commodities out there. So let's go take a look at a couple of equities. Here's an interesting one that I looked at earlier this morning. The company is called On Deck Capital. Now, On Deck Cap. When I saw On Deck, I was like, hey, maybe these guys are baseball trading card. I don't know what they are. It wouldn't make sense. But On Deck Cap stands for capital out here. And they're in the business of making loans to small businesses out here. Now, this is an equity, went public on December 17, 2014. Its all-time high happened to be the very next day, December 18th, when it made a move up to 28.98. And since then, basically on deck capital, I haven't studied their balance sheet, taken a look at their MD&A out there, anything along those lines, but basically, it's gone south. South all the way down to the lows on August 24th. Now, that would make sense. Got down to 775, but you're trading at 1201 right now. What caught my eye, and probably catches your eye too as I blow this up on my screen out here, is what it did today so far. Depends on how it closes out the session, but it created this nice little island bottom. And an island bottom pattern, island top pattern, island bottom being the most bullish out here, it's worthwhile at least investigating, I suppose. Now, the island bottom, took place as a result of a gap down. It's $12 stock. Result of a gap down out here on August the 4th, where it gapped down with volume of 3 million shares. You've done today 5 million shares to the upside. So it's moving up into the gap with more volume than when it came down. That's a positive. That's not a false positive. That's a positive out here. This morning when it gapped up, what it did was, so the top of that gap, meaning the high of August 4th, is $11.30. But let's just make it even easier, because it made an intermediate term high on November the 10th. That high was $11.51. That's still below this gap to the downside. And it's above the $11.51. Today's low is $11.62. So there's your nice little island bottom inside of on-deck capital. And you certainly have a sign of strength today going against a sign of weakness. And the sign of strength is a heck of a lot stronger than that sign of weakness. So, it'll be worthwhile. Let me just write it down on a pad of paper. Let's just kind of watch it over the next couple of days. Now, ONDK is the ticker symbol. And as long as it doesn't come back to fill that gap, then what price ought to do, once it can close above 1292, ought to make its way up to the next gap, which is all the way up at about $18 or so. So worthwhile. That's a 50% move from where it's trading at right now. Not saying it's going to do it, but it is perhaps one of the more bullish patterns that I've seen in some of the stocks that we just took a look at out here. Looks like there's a question inside the Dan. Any projection on Netflix? How high can this go? I can go as high as it wants to, I suppose, but let's take a look at Netflix. Let's look at it on the NFLX, the ticker symbol. But let's take a look at it over here. Give me a moment. NFLX. And it has, Netflix is over. Well, right now it's over its most recent swing point. B point of an A to B equals CD to the upside. That's August 5th. Volume there was 26 million shares. You've done 16 million shares so far. Now, what does that 16 million shares equate to? Let's go take a look at the straight line calculator out here. So you've done about 16.7. That would say we've done about 3.5, a little over 3.5 hours. No, we've done about 4 hours. Sorry, 1 o'clock. 27 million. So 27 million is taking out 27 million. So, if it closes above 129.29, we'll go take a look at a couple different A to B equals CD patterns out there. The most conservative one, that's going to give us a price projection, though, that it's headed up to 134.84, probably 145 or so. But we'll take a look at that when we get back. We'll take a look at Netflix. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization information capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. We were taking a look at Netflix before we went into that break out there. And so we know Netflix is over a swing point as we speak right now, doing it with similar volume, maybe more volume. So that's a positive. As long as it trades above or closes above that swing point from the trading day of August 5th, that high is 129.29. No reason for it to not go higher. Now, there's also a confirmed A to B equals CD to the upside with inside Netflix. And that's in taking a look at the B point from October the 9th. Had volume of 22 million shares. And as Netflix got above that, it did it with 33 million shares. So it was able to give you a confirmed at least 1-to-1 A to B equals CD to the upside. That 1-to-1 projection gives you 134.84 as a price target. 1-to-1.272. I'm sorry, 1-to-1.272 is 134.84. 1-to-1.618 about 145. So that's one price projection. The question was how high or what's the next level inside of Netflix to the upside. If we also take a look at just simply expansions of swing points out here, the high that it's dealing with today, August 5th, and the low from August the 24th. You can see that the 1.272 is around 141 and a quarter to 155, 156.35. So those look to be the price targets for where Netflix is headed to. However, there is some problems in River City. That River City being that on a weekly basis, Netflix is moving higher with less relative strength out there. Now, that alone is not a sellable pattern. However, so let's go here. The most recent weekly low took place back in 2014, December 19th, nearly a year ago, just shy of a year ago out here. And if we take a look at what our wave count is to the upside out here, we'll see it got to a 7th wave. It did it right back here on August 7th. Little evening star formation that it had, but then down into the low, found support on August the 24th, found support at its TAS market profile out here. So that was and that market profile had been established since about the July 4th holiday out here. So price continues to move higher, doesn't have less relative strength out there. As long as there's no bearish reversal signal, those price targets are where it should head to. The reality is this thing could have just simply reset. Well, it's recycled for sure. We know that to be the case. And it's really only in its first leg up on the weekly chart out here. So Netflix still looks pretty long and strong. Don't be shorting Netflix. There's no sign, or I would suggest that you don't short Netflix. There's no sign of any weakness out there, other than the mere fact it's moving a little bit higher with less relative weakness. I had a question here from Robert asking me if I would give him my take on the IBB, which is the biotech sector. So we've got the NASDAQ moving higher. We know that the biotech sector, I don't know what the weighting is inside the NASDAQ composite. The NDX 100, we looked at that yesterday. I don't think the NDX 100 there was much in the way, if any, biotech in it, right? I don't think there is. So it's just in the NASDAQ composite. And I don't know what the weighting structure is. But nonetheless, let's go take a look at the IBB. I can show you another chart as well. But let's take a look at this one here. While we're doing that, I'm going to switch over to, where did I put it? I think it's over here is where I've got it. So let's take a look at the IBB. Here's what we know about the IBB. Number one, let's take a look at trend lines out here. Let's first do that. We know that the IBB, we talked about islands and so forth. The IBB had formed, let's see if it did. The high, 388.68, the low 380, low 389. Yeah. So the island, there's an island top out here inside of the IBB. It's right here. It's this group, right? We took a look at an island bottom with that company. What was it? On deck. I show a green line. I probably should show an arrow out here. That'd make it a little bit easier for you to see. So here's the green hornet. Here's the green arrow. There's the island top. But the work in the island top is basically, you almost have to say it's done, because we saw price fall, move lower in August 24th. The volume was 4.8 million shares. That level basically was tested with 11 million shares, so it was tested with even more volume out here. You can make the case that the IBB ought to be able to make its way back there down to that September 28th time frame. That's one case that we can make. Let's take a look at that trend, see what it's done from a trend line standpoint. This one here, let's just go ahead and use a green line. Now we're going to take the high from that island top on July 20th. Then we're just looking at trend line. So we're going to use the high out here, probably September 17th is my guess. September 17th it is. We know that the IBB has broken through that trend line. It did it about 5, 6, 7 trading sessions ago on November 18th. So we've got a trend that has been broken. We actually have a little rising price channel to the upside out here. We'll go see if we can count the waves, but we'll do that on my other software package. But here is let's see if we can find what's probably the right channel line. That looks more like the right channel line inside the IBB, at least to the. Yeah, I'd say there's your channel line, kind of a narrow channel line. Let's not worry about the multiplier effect out here. We'll go ahead and turn that off. So we're in a nice little rising price channel out here. You're moving. You don't have the volume where this thing really began to break down. I have to say that the likely target, let's do some retracements out here. Retracements from the high to the low. Robert, so I'm going to use the low from August 24th. Well, I got to use the right tool out here. So I'm going to get my retracement ruler going. Give me a moment to do that. So from high to low, just to get a feel for where we're at out here. You're above the 0.382 retracement. So we've broken a trend line. You're above the 0.382 retracement. That would suggest to me that what the IBB wants to do is move up to the 356.24 level. That would make sense as well. Why? Because what we're doing is we're taking a look at getting back to the area where the downdraft began on September 21st. Of course, that only has 5.4 million shares, but that's still pretty good volume. So we've got some horizontal areas of resistance that have been tested around that 350, 360 level. So it looks like that's what it wants to do on that chart out here. I would say that is actually, that confirmation is really coming from the we don't do this too often, mostly because it takes a heck of a lot of work. But I did, with the holiday weekend, I did some extra work for my clients, which was shared in the newsletters on Monday to yesterday as well, where I was really taking a look at. And so when I issue a warning, so to speak, like if I say don't short the Russell 2000. It's not because it's a feeling I have. It's because of work that I've done on that. So I won't get, that doesn't mean I control what the market does. It just means that, man, the signals aren't out there to do that. That's not the wrong place to be looking at. Now, inside the IBB, if we take a look at the second panel out here is, now this is as of, I only get this data here basically weekly. So this is as of Friday's date out here, and the data I'm referring to is just taking a look at the issues with inside the IBB. Let's go see how many there are. Give me a moment. We'll pull that up on the screen out here. So give me a moment to do that. Let's see how many constituents are inside the IBB. So the IBB is made up of 141. So of that 141 constituents, I actually have the advancing and declining issues by day. I don't get it until Friday or Saturday. But what we're looking at here is its own advanced decline line inside the IBB. Now, what's interesting in the advanced decline line is a nice little leading indicator. Now, inside the IBB, you don't see too many divergences out here, and they're usually very subtle. But there's one that most certainly appeared over the weekend, and that was that we can see that price has basically stopped up near the swing point here from November the 5th. So we know that that's what it's done. Here's that trend line. That trend line's also in place out here. Well, that trend line that was broken, the advanced decline trend line was also broken, and that advanced where we see price stalled out here right around the November 4th time frame. We now have more advancing. Its net advanced decline line is at a higher level than it was back at that swing point level. So if the advanced decline line is a further indicator, Robert, of where the IBB is headed to, it's headed higher. That's just the way that it looks, at least to me, when I do an analysis of what's going on inside of that. Now, just because the IBB was the lead dog on the way down that impacted the NASDAQ composite, it could be something else this time around. It's not like it's the NDX 100 out there. So the market can still go south without the IBB necessarily participating out there. So that's what's going on. Again, we just simply go back to, those other 3-hour, 5-hour charts that we're looking at, and they're the ones that say caution out here. But we've got to really wait for some additional confirmation, in my opinion. Okay, so we can go take a look at currencies now. And let's go see what we have out here. And we take a look at currencies. We take a look at the U.S. dollar index. The U.S. dollar index is really trading up near the same highs, this $100.35 level that it has for the last 3 or 4 trading sessions out here. No reversal candle. Says the U.S. dollar index today it actually looks like it tested the swing point high, which was my target. One of my targets, I believe, right? Let's go pull this back. Yeah. So one of those targets was the swing point from April the 13th. The low of that is priced out at 100.50. The high today, 100.54. Okay, so we've tested that swing point out here. We've tested the bottom of that swing point. We're not going to pay attention. I'm not going to go take a look at volumes or anything like that. Instead, it's really what's the currency. So we know that what's the euro doing, what's the yen doing, what's the pound doing out here. So what's putting the strength inside the U.S. dollar? Well, let's go take a look at the euro, see what the euro is doing out here. It's not the euro. The euro's pulling back. The euro... and certainly, with its weighting structure, it's putting some in here. But the euro hasn't completely failed. Remember, we got a nice little bullish engulfing yesterday. Price closed. It did manage to close above 1.0619. Euro 1.059, give or take, because I'm off by about 10 or 15 minutes out here. But if it closes back above 1.0619 out here, It gets back into that. You have a rejection of a swing point at least twice. Volume-wise, we don't have that, but you'd have a rejection of that swing point. That's key out here. So the euro's having a little bit of an impact. It must be the pound or the yen. Let's take a look at the pound. We looked at it's the pound. The pound, certainly. We took a look at that descending price channel over the last couple of days. We can see that price so far has just kind of slashed right through it. That doesn't establish a new trend or anything, and maybe it closes back up above that level. If it doesn't, not a big deal, except that it will go ahead and put strength inside the U.S. dollar index. And it would also say, let's look at retracements from low to high. Well, that's interesting. So in essence, it's gotten very close to the 0.786 retracement, which would be 1.485. It didn't get all the way down there. If it closes below that descending channel line out here, probably gets down there. But if it closes below 1.485, it goes all the way down to the bottom, 145. That'll put some strength inside the U.S. dollar index out here. Let's look at the yen, see what it's doing. Well, that's weakening. The yen is just doing what you and I had already perceived it to do when it broke through that consolidation level, which is eventually get up into the 125 level here. It's the 0.786 retracement from high to low, 123.78. It hasn't been able to get above that level, but 125 to, we'll call it even Steven, to 1.2585 is likely where the yen is going. That's weakening. That'll put some strength inside the U.S. dollar. So it's not all euro-driven out here. Gold's been somewhat steady, although we've had a bunch of volume inside of gold. Let's look at the gold by taking a look at the GLD. The GLD today, we're going to see 7.3 million shares already. That 7.3 million shares is taking out the 5 million shares from November 27th. Light volume trading on November 27th. I don't really know how to gauge that. Do you? I don't. 6.7 on the 30th. Again, I don't know how to gauge that. Can you multiply times 2? I don't know. I mean, if you do, then you can't. November 30th was Monday, right? So what is it doing? What is it doing? Still, we have, it looks like prices moving lower with a little rising price oscillator. Let me see what the GLD is doing exactly. Give me a moment here. What we'll do is we'll switch over. Let me switch over to these charts out here. Let me put the GLD up. This would be kind of interesting. This is going to be the weekly. Let's do it here. This is the December contract for gold. It did make a little bit lower low today. So it gets us into wave 6. But let's take a look. The gold contract itself has a price relative strength divergent pattern. GLD is going to have the same thing, I would imagine, also. It's not showing up. I don't know why. But the actual gold contract is. So what does that say? It says we still continue to move lower with less relative weakness out here. So that says, a bounce could be in order. And I don't know how it's going to happen. That's the odd thing. And maybe it's not going to happen. I don't know how it's going to happen, but everything indicates that it should, meaning that gold should bounce. But, let's take a look at some of the mining equities. Let's go see what some of those guys are doing today, see what volume. We've got Randgold Resources, 55 cents to the downside, 490,000 shares. That's after moving higher yesterday with 1 million shares, so 490. Looks like we actually have a little bit of light volume inside of at least this specific equity. So 490, we've been trading for, what did I say, about 4.5 hours, give or take. Not exactly, but close. 490 gets you to 707. Yesterday was higher with 1 million shares, so that's interesting. You've got Randgold pulling back with light volume. Let's look at Gold Corp, right? A little bit weaker than market equity out here. Yesterday moved higher with 7.3, and today 3.8. That's going to be light volume too, right? 3.8 million, 3.8. That's 5 million shares versus moving. So, somewhat moving back with light volume out there. Right now, we got the Dow trading off 56 points. S&P down about 10. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Not a lot of conviction in this retracement thus far here. Volume-wise, the Qs are at about 11 million. That sets up about 16 million. Today, of course, the Qs are moving higher. The IWM, yesterday, it did volume to the upside of 27, 28 million. Today, looks like it'll be about 15. The SPYs yesterday, let's go see what they were doing. The SPYs have done 51 million so far. That equates to about 73 million shares. Yesterday, they were pushing higher with 97. The Dow Diamonds, I believe, were pushing volume yesterday with volume to the upside. Yesterday was 6 million. Today they probably do about 4 million. So no real conviction volume-wise thus far at 155 in the afternoon. Had a request to go take a look at light sweet crude back $1.72, trade out at $40. If we take a look at the current January contract out here, it's hitting the swing point level. The low of August 24th that was priced at $39.97. Right now you're trading at 40.14. The low's been 40.02. So looks like it's inevitable for that swing point to be hit. Let's go put a continuous contract up here, TL, and go see what it is doing. Where's this thing? Let's put this on a longer time frame out here, quarterly. That sounds like a longer time frame to me. And the quarterly time frame says that if it gets through that swing point that we were taking a look at, then price probably moves down to the area of 33.20. So it looks like 33.20 would be the next target area for light sweet crude. That is if it's able to close below, whoops, go back to the daily. That's if it's able to close below 39.97. If we take a look at the USO, let's get a feel for volume inside of that versus the actual contract right now so we can go compare swing points out here. USO has got volume so far today at 34 million shares, so 34.5 gives us a run rate somewhere in the 49 million share level, and the swing point that it's going against, which is the trading day of August 24th, no big, had 49 million. So you're coming into that swing point with volume. The low of that hasn't been tested, 1237. You're at 1246, but it's pulling back with a bit too much volume. Not exactly what you like to see. Nonetheless, it needs to test 1237 and see what happens when it gets that area. If it closes below that, the lower price that you and I looked at in light sweet crude is more likely the case out there. So that is on light sweet crude. To finish out the show, what do we want to really look at? Let me just recap for you what to be paying attention to price-wise. I have to put those charts back up on my screen. Let's see how quickly I can do that. So inside of the ES, let's look at it like this. You've got to see it close below 2082.75 today. If you see it close below that level, I don't mean 2082. I don't mean a couple of ticks out there. But if you get it close below 2082.75, that's going to set up a retracement. How much of a retracement? We looked at those numbers earlier. I don't recall what they are off the top of my head. Inside the NQ, it depends how it sets up. You've got a price moving higher, less relative weakness. Right now, we've got that shooting star candle we talked about, but a lot of time left in the trading session, so I can't really say what type of candle formation is going to come in at the end of the day. If overnight we don't see newer highs out there, we'll get a confirmation. That would suggest retracement. 46.71 would be the first level inside of the NQ out here. I don't think it's the end of the world or anything along those lines out there. So those are the levels that I would be watching. But folks, stay tuned. Our man David White is up next. This is Wonderful Wednesday. So happy you have a great afternoon, and I look forward to seeing you on Terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.